All right, good morning. Good to see you. It's 6:33 on Wall Street, about 3 hours before the open. We're doing QuantBox Live, uncovering the best fundamental opportunities across global markets. If you're watching this on YouTube, you're watching it many hours late, and half the time I forget to upload the video to YouTube. I forgot yesterday. So you just miss out, YouTubers. Yeah. Why don't you swing by quantbox.co? Why? We have lots of pretty colors. They're very attractive to the human eye. But what does it mean, Basil? What does it mean? Well, you can look at things like GDP and inflation and unemployment and interest rates and the differential, and you can look at institutional positioning and retail positioning, 5-year and 20-year seasonality, and a whole bunch more, and you're able to make a decision. Yeah, look, QuantBox even does technical analysis and projects prices 7 trading days in advance. Oh, are you watching the COT report? No. What do you mean you're not watching the Commitment of Traders report? That's where we get our institutional positioning data directly from the Commodities Futures Trading Commission. But they're just ugly tables. It's like looking at a giant spreadsheet. We actually help you make sense of it, organize it by most bullish to most bearish, and most importantly, looking at the changes. Now, that's the flow of capital inside of the stock of capital. How about projecting central banking policy 18 months in advance? Yeah, where do we get that? Well, from the Fed and the RBNZ and the BOJ and the BOE and the ECB and the SNB and the BOC and the RBA, et cetera, et cetera. We even look at real-time sentiment and organize it. QuantBox looks at the S&P 500, gold, yen, dollar, yields, and volatility all in real time, but on 3 different time frames, and organizes it by risk on or risk off or neutral, and then tells you what is most likely to be bullish and most likely to be bearish on those time frames based on quantitative analysis. Oh my gosh. Hey, but you know what? You can take a trial for $8. After that, it's $80. Bloomberg terminal is over $1,000 a month. Yeah. So anyways, look at this. There's a way to organize all your thoughts from bullish to neutral to bearish based on quantitative analysis of macroeconomic data. So what do you really get for the $8? What do you really get for the $80? Confidence in your decision making to let your winners run. With that being said, it's still risky, even if you're making smart decisions. Trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Let me get some coffee down my throat. That's right. Look, we launched a brand new service. It's being developed right now. I got a heads up yesterday on progress from the development team. But we're developing AI to watch all this data, all this pages and pages and pages and pages and pages and pages and pages, millions of tables of data. It's good information, but it's overwhelming to our simple human minds. So we're developing AI to watch everything for you, write reports for you, and alert you in real time that something important has changed. Oh my God. So anyways, right? Yeah. So pretty soon our AI, I can't think of a better name than Aiden. It's the only one. Right now I own about 3 different AIs. They're all named Aiden. So this is the 4th one. This one too is named Aiden because he's Aiden Investors, I don't know. Anyways, that's being developed in, who knows? I can't tell you when, but 2 weeks. We'll see. We'll see. Anyways. And it's not $200 a year. It's $200 a year now. And when I launch it, it's going to be $365 a year. Yeah, cool. Let's get on with it. I'm super excited about that. In fact, I'm already on to the next in my mind of what more we can do. And that's dangerous. dangerous. That's power. Playing with fire. Yeah. There's so much I think that can be done. So I'm super excited. QuantBox is awesome. Okay, so yields are still good. Nice. Oil's trying to rally back. We're above 75. It doesn't look terribly bullish, but if you wanted to be a bull, you could probably fight your way into a very mediocre trade that might work out. But I mean, it depends on, like, do you want to do that? Sometimes you do it. It's dirty. It's not good trading. You don't like it, but sometimes you got to get out of bed and do what needs to get done. Sometimes you need to stand up and get out of the foxhole. So, anyways, maybe that's a situation. We can take a look at that later if you want. Gold hasn't really done much. S&P 500 hasn't done much, and that bothers me a little bit because it's so overbought. It seems to me nobody wants to take profit. But the way I described it a week ago, it's like a ballerina standing on her tippy toes holding a bowling ball over her head. Yeah, the arms are shaking, the knees are shaking, but right, S&P 500 hasn't fallen yet. Okay, good, good. But it's worrisome when it's not going up. Okay, stuck at 110 on euro dollar, and Bitcoin trying. Doesn't look like much there, but it is trying. And I don't know if you want to call it a double bottom, but it's trying to head back up. Anything else going on? A lot of neutrality on the downside here. By the way, you can reorganize this and you can double check that it's displaying correctly. Okay. Oil is incredibly bearish. Okay. All right. Let's take a look at the other risk gauges. Mixed. It's very helpful. See, this ticked down from 3 to 2. So longer term, we're going to neutral. So probably, if we have a repeat of yesterday, if today is like yesterday, these are all going to go neutral, and you'll know. You'll know to not be aggressive. You'll know to be patient. You'll know to be disciplined. Knowing that is important. Just staring at charts, you might just throw down another trade like you did last week and it worked, or the week before and that worked. What about this week? It's QuantBox is saying, look, based on what's happening in the S&P 500, what's happening with the yens, what's happening with the dollars, what's happening with yields, what's happening with gold, what's happening with VIX, you should hold tight. Remember, not trading is a decision. Being in cash is a position. So, right? Be careful. Okay? Be careful. You probably don't want to trade when nothing's happening. So be careful. So when you go out there, be cautious today. Okay? And circle back from time to time and see what's up. See if we're getting some new risk on. Okay? And where's my drawing tool? Hello, drawing tool. No, I don't see it. All right, hang on. Good. All right. It looks like this to me. If we were to do an average price and a slope. Okay? Of course, y equals mx plus b is the formula that you're doing in your mind. So you're doing the mean price, and then you want to look at m, which is not just the mean, it's the slope of the mean. So that's a negative number. The slope is negative, not positive. It falls over the run. It's the drop over the run. Well, technically, it's a negative rise over a run. So it's not good. And then this actually explains what the scatter plot is doing. A negative integer is negative. This stuff's bullish, but is unexpectedly bullish. This stuff down here is bearish and unexpectedly bearish. Yeah, negative integers, not good. This is how a scatter plot works. Also, remember the stuff up here is doing good. The stuff up here is doing good. The stuff down here is doing bad. And the stuff down here is doing bad. Okay. But to change colors, okay, everything is bullish, but this is bad. Everything down here is bearish, and that's good because it's expected to be bearish. So that's good. You expected these things to be down. Everything up here is bullish, and that's good because that was also expected. And everything down here is right bearish, but unexpected. Right. Wait. Sometimes I get this backwards. Everything down here is bearish, and that's good. But, anyways, I seem to be passing this speech up a lot lately. Hey, it's not my gray hair, is it? Anyways, all of this explains what you learned in 7th grade, and you didn't understand it then, and apparently I still don't understand it now. Anyways, it's bearish, but unexpectedly bearish, so that's bad. All right. So, anyways, positive times positive is positive. Positive times a negative is a negative, and a negative times a negative is a positive. Remember all of that? I'd like to thank Miss Simon, my 3rd grade teacher, for teaching me all this. All right, cool. So it's nothing's happening now based on our risk gauges, our market gauges. But what is happening is not good. So now you have a different way to analyze market conditions. When you look at the sort of the aggregate data, it's like, yeah, you should probably not trade. When you look at how the actual assets are moving today based on buyers and sellers, it's sort of more likely to be people getting out of good trades. And that's why you have the negative slope. So be careful. Don't overtrade today and be a little more risk management. Okay, a little more risk management. So if you're the ballerina standing on your tippy toes with a bowling ball on your head, have someone put a hard hat on you. Oh, I'd love to see that picture, huh? A ballerina on her tippy toes holding a bowling ball and has a big yellow hard hat on. Yep. I know. What a weirdo. All right. Where do we want to go today? What do I want to see? I want to double check that oil actually, because there we go. Yeah, I noticed the targets seem to be off. It's definitely bearish, but the targets are wrong. We're going through an upgrade right now because of the AI development. So, anyways, we'll fix all that. Obviously, it's not. It's 72.91, 74, 75. Very bearish here. Notice this last month from the end of November into the December period can have some up. And you can see this collapse in oil here. Boom, 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 boom. Okay. And so maybe we stabilize here. That's what everyone is asking. We can then take a look maybe at, let's do seasonality on oil. Let's get a better look at oil, huh? Dow. It's under U. No, 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 no. Oh, Use at the top. USO. How come I'm not seeing a USO? Do I not have it on here? USO? Ah, interesting. So we have oil up, or we have VIX up there, but not oil. Interesting. I will have to look into that. Hey. Oh, too bad. Cool. Maybe we can't get the data for it. That's the issue, because now the new scatter plot pulls up weekly. Maybe we just don't have that data. That's interesting. Well, while we're here, let's just look at the S&P 500. So we're wondering if there's a little rally left in us. Okay. We see there's some profit taking coming, and then a last week rally. There's your little Santa Claus rally. Week of the year. It's week 48. Week 48. So we're right here. It's supposed to be a good week. I mean, I guess I shouldn't say it that way. Historically, when you look back to the past, this is still an up week, but profit taking, huh? Week 48 is from Monday, November 27th until Sunday, December 3rd. Is that where we are? 28th? Yeah, I guess so. So we're right there. Okay. Now, it just looks like this. It's a little dipsy-do. But remember, if you're a bull, you probably want to buy somewhere in here for it to rally, right? Not just this week. I'm not just talking about this asset this week, just in general. If you're a bull, you got to look at the market like this. This is accumulative. Okay, this is the shape of the year as money comes in and out of the S&P 500. You get a shape of the year. That's why I put this here. I want us to see the shape. This is starting at 0, and money tends to go into the stock market, doesn't it? It's generally bullish, even on bearish periods. The amount of money accumulates. Then you go through profit taking, and then you reaccumulate, and there's some profit taking, you reaccumulate, right? So my point is, very often what I've been teaching, and this is good because I've been teaching it before QuantBox was developed, 20 years before QuantBox was developed. Okay. I typically buy in here, and I typically buy in here. And I've been teaching that for 20 years. Now I can prove I'm right. That's the problem with research, right? Very often you find out you've been wrong for 20 years. Yeah. But you have to be prepared to be wrong when you actually start studying things. Okay. Yeah, Denise has used ChatGPT to create that image. It's Dolly. Have you guys used Dolly? Yeah. That was actually the first AI I ever played with. It was created by Open AI. And you go in there, and you type out with as descriptive as you possibly can. You could put in a paragraph of, I think I did like create an image of an evil king sitting on a golden throne who trades foreign exchange currency and has charts behind him, and is, and has a skull for a face and all this. Like, you really, really, really put in a very descriptive thing, and it'll just make versions of it for you over and over and over and over and over again. Right. Yeah. and it never complains. Yeah. Well, it'll get there. So I've been tracking startups that are you like your little Alexa pucks and your Google, your Hey Google things. Um, oh my God, what's coming down the pipeline is truly amazing using AI, of course. So the one I've seen is they just they put a little basically it's just looks like a lamp, right? So you have your base and then just a simple neck, if you will, just metal or plastic neck, and just a little sort of flat circle. That's it. As boring as you can possibly get, but it moves. And so when you're like, if you use Google, you're like, hey, Google, it'll turn and look at you and light up. There's no eyes, there's no mouth, but oh my God, it's enough for a human. It's enough. It's all of a sudden it's alive and it changes the colors and stuff like that as it's talking. But here's the next thing. The next generation of AI can have a conversation with you as real as a human. And it's shocking. Like, it's startling. Like, you think AI is good now in its ability to do language. No, it's shocking. It can replace a human very, 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 very soon. And so some of the startups I've been tracking are building things for those that are retired. So imagine, an 80-year-old woman living by herself in an apartment with no friends, no family, like she's just completely isolated. The level of depression in communities like that is extremely high. And this device can just straight up talk to you now, like a full-on human conversation with emotion and banter and everything. And it's startling, though. It's scary. And there's no face, and you'll talk to it all day. It becomes your best friend within 20 minutes. It'll it'll play games with you and laugh. Oh my God, I thought I had you on that last move. Like, oh my God, it's really amazing. And it's better than a cat because it doesn't need a litter box. And you don't have to compete for food. So anyways, um, yeah. So anyways, we're there. So anyways, here's the shape of this market. Now, QuantBox will give you the shape of, you know, what is it, 37 since we don't have oil. Um, Markets. You can see this is typically the year of how this builds up. So you start buying and there's a little bit of profit taking, there's buying, and then there's about, 3-4 weeks of profit taking. It even goes negative for the year. Well, you should be buying, huh? Okay, buying some profit taking, some buying, some profit taking. Okay, flat, 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 down, 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 down. Hey, maybe somewhere, but right? Do you guys remember week 41? Week 41, right? We're like, we need to buy the stock market. You guys remember that? Go back. Week 41, we need to start buying. We need to start buying. Need to start buying. Well, Nasdaq's up 7% since then. Yeah. So I think that's really powerful. Right? I don't think I spelled cumulative correctly, but shh. Stop being such a nitpicker. Gee whiz. Like, Wayne, that's not a word. Oh, yes, it is. They teach it at Harvard. Yeah. Yeah. All right. Huh? That's power to see the shape of the market. I think that's amazing power. So these are probably buying opportunities, and that's what QuantBox is trying to do, show you with the scatter plot. So everything down right now, it's either you want to look, remember that negative slope I drew in the scatter plot? That means one of two things. We're at the very top of the market and everything's getting ready to come down. Massive profit taking, aka the reversal. Or everything's just down today and those are dips you need to buy. You're like, well, Wayne, which one? You need to make that decision. Okay. If it goes any further, if the machine needs to make the decision for you, the machine doesn't need you. What value are you providing, right? I'll just hook this up to a trading account and make $1 billion. No, you need to create the value, but you need to make informed decisions. And so at this point, okay, you need to look at it and say, all right, everything's neutral across the board, or soon will be neutral across the board, yet the actual market is positioned negative. Is this a profit taking, or is it going to be the top? I don't know the future, but you could say, well, it makes sense that we have a 3-week decline and then a little bit of rally around Christmas. Okay. Okay. Yeah. And look at that is the stock market rally, the Santa Claus rally, I should say. So do you buy down here? Well, look, massive profit taking next week. Yeah. Anyways, let's look at the 10-year. Yeah, nice. So this is good. This is good. This is healthy. It means the market's functioning. That's all I care about. Right? That's all we care about when it comes to the treasury. There was an auction yesterday. What was it? A 2-year, 50 billion or something. It was work like a charm. No problem. So yields coming down means money is going into the treasury market and it's functioning properly. So that's risk on for me. Okay. Now look at this. Typically, October, November, December, yields come down. And they did. Look at this. July, August, September, yields typically go up. A lot in August. They did. Now, maybe the degree it was off. Remember, we had a crazy rally in yields, which means the treasury market plummeted like negative 20% kind of plunge. Okay, but it happened right on time. And in the near future, we'll see that very often yields start going back up again. Uh-oh. But right now, everything's functioning well. So that's good. Have you guys been using the new Bitcoin? Yeah. Slightly different layout. I'm looking at I'm looking at do I like this layout? So anyways, if you have thoughts, do you like this? You could see that looks wrong again. I haven't given them that feedback. That looks wrong. I have a feeling this is flipped. Institutions 50-50. I think retail's heavily long. So somehow the data's got flipped. And it's really easy. You just it's someone has an inverse check mark next to something. You're like, no. So I'll have to double check that. But what do you guys think of it in general? I don't like the price. It's too squeezed for me. And this, I suppose, is okay. Okay. GDP is good in the United States. Inflation is up, and that's bad. Unemployment is right. Unemployment is rising. That's bad. Interest rates have been rising, and that's bad. Money supply. Ooh. So, anyways. Best case scenario over the next week, Bitcoin gets to 38,000. For Bitcoin, that's nothing. That's a day. So that tells you the slope of the mean is quite flat. And you can see it here. The slope just slightly, ever slow. uh, 37 and a half and 37, right? 36,800. So it's still quite flat. And so it gets a neutral score. Mhm. Mhm. Okay, so this says neutral, but it's a 4. It's on. That's bullish. Okay. Always check. Always check. Okay. A 4 is bullish. Okay. Look at this rally we've had in November for gold. Unusually strong. Okay. Unusually strong. We're way above normality. But December can be pretty good, especially over the last 5 years. December is an up. Retail's 50-50. Okay. Institutional is 72% long, but they're also 78% long dollar. So that kind of flattens this price out. Nobody's selling gold except these knuckleheads. We call that liquidity, by the way. Okay. These guys are liquidity. So we can go back to seasonality. I think we got gold, don't we? Yeah. Mm. Okay. And here's that move. It happened early and it happened extraordinarily, right? Above trend. Over the last 5 years, it's gold ends the year strong. Over the last 20 years, it ends it somewhat strong. This market has a positive slope. Money flows. Okay, this way. Yeah. Mm. Is it not? Oh, it's not done loading. Just wondering, do we have weekly data for it? Mhm. We might there we have a lot of data providers, and I'm wondering if we don't have that kind of data for commodities. If so, I'll put that on the list because I like to see the shape of these markets. This is the S&P 500. It hasn't updated yet. I can see it thinking, 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 thinking. Boom. Okay, good. We got it. Just had to do a lot of calculations. And that just shows you, by the way, that QuantBox is not a website with little images that get popped up there. It's not like a dynamic image either. It had to do the calculations. It's cool. Like it's cool. Okay. It had to gather all this information for us. So, anyway, so now we can look at the shape and much choppier market, huh? Up and down and up and down and up and down. Well, you should be aware of that in the way you trade it. And it looks like volumes thin out here. We're at week 48 and flat, flat, okay, up, 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 up. Well, it looks like yeah, week 48 is not a good week on average. Okay. Now, this year it hasn't dropped, has it? We don't have a negative week so far. It can be, very often it can be. And then we sort of build up to the year end. It's not much of a rally, but we can accumulate. Okay. Maybe not right? So anyways. So what would we say? So you could look at this 4.8 until the end of the year. Just over another 1.5% rally up on average. Cool. A little bit of choppiness. Okay. But yeah, so, right? So maybe somewhere this week or next week, you could prepare for at least hesitation and then up. Cool. So let's go to some charts, huh? Do da, do da. All right. Boom, 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 boom. All right. So this week, be open-minded to see somewhat of a down for you to buy. Yeah. See, that's the difference, right? Being informed. You're like, will you buy a dip in gold? Yeah. Yeah, it could fall for a week or two, but I'm going to buy it. Okay. So that will in particular help those that are swing trading, right? So I did a big speech at Forex.today yesterday about how to trade properly. And so kind of looking at it like we would have been there in gold. And what I was suggesting is you set everything up for the next day. My speech was if you roll into the New York session and you're like, hey, what's up, fellas? What are we doing? Are we buying or are we selling? I said, you already lost money. The other analogy is when you walk into a room, when you walk to the poker table, you got to look at all the players and ask yourself, which one is the sucker? And if you can't tell, you're the sucker. So anyway, so I'm like, look, we're way up here. What do you want to do? Okay. You extend this out to days, right? So this is, what is it, Tuesday? Tuesday's buy zone on Monday is your trade plan. And so what happened yesterday? Yeah. Boom, boom. Cool. So this is okay. New York we're hours away from the New York Open. So that's just floating out there. So what you want to do is, identify where all the different levels of resistance are. So you're like, let's grab that one and that one and that one and that one and that one. Okay. So if everything continues as expected, your trade plan is something like this. Okay. As Fonzie would say, that's plan A. All right. And then B would be down here. Okay, I got to look at the stock market here. This is analysis from yesterday, just to show you where we are in the world. I said if we break to the downside, be careful. That's profit taking. And you don't know when profit taking is going to stop. That's the problem. You don't know. But you should be aware that that's the risk you're facing. This could be the top of we'll call it the fourth quarter. Okay. So many people are up 5 or 6 or 7%, and they'll watch it go all the way down to zero. Is that what you want to do? Then I suggest instead of staring at the chart, you write down the behavior you would like to exhibit as a disciplined trader and investor, and create rules of engagement for yourself. We know there's going to be profit taking between now and the end of the year. It's going to happen. When we don't know is when. So how much of the up move do you need to feel good about yourself? Do you have to get every penny for pride? Or should you say profit taking is coming and the risk you face right now is that we could be at the top and the profit taking is going to be early this year? Could be. Will that happen? I don't know. But you need to be thinking about it. And what should you do? What would be prudent? What if you had a fiduciary responsibility? Well, then you'd say, well, I think it's going to go up, but I have to address this. So what would you do? Would you exit a trade front that you placed down here? No, probably not, huh? But what about a trade you placed in here? Should you take profit on that? Yeah, maybe. Okay. What does the chart say? Well, if next month, if December is a down month, this is the projected move. Would that hurt your position? Well, then you need to do something about this, right? You need to hedge. Okay. Like if you remember, when was it? Was it July or September? Somewhere in, I think here or here, is when I told you I was triple leveraged short to hedge the S&P 500. I very quickly got out because market conditions changed, and I'm glad I did. So, anyways, is that a real risk? And if so, what are you going to do about it? And then, what if it does this? Great. Well, then we have a whole different risk. There will be profit taking. It just won't be at the beginning of December, right? Okay. And so you'll deal with that. Really, you're only now in this tiny little range. Now I have it in this range to say, look out below. If we stop going up on that M pivot, it means we're going back to 4,100 on the S&P 500. Yeah, a 500 point drop in the S&P 500. You probably don't want to stop and stare. Now, if you look at seasonality in QuantBox, you'll also see that there could be additional future risk. It could get worse than that. What if this drops all the way down to 3,800? Okay. Why not? You think inflation's gone? Maybe. Probably not, in my opinion. But what we're waiting for now is PCE on Thursday. We're 48 hours away from that. And PCE is probably still going to be low because we're measuring backwards. And we already know CPI has fallen around the world too, not just here. So PCI or PCE will probably be pretty good. In particular, the Fed watches core. And so it'll be good enough probably to go this way. Okay. Probably, right? What if it's not? Then we probably just hit the top. People will start talking about Fed's got to raise one more time in December and inflation is not going to fall or whatever. Just panic. It doesn't matter if it's rational. We're rational, but you don't use QuantBox to trade against the market. The market will run you over, even if it's irrational. There's a saying, the market will stay irrational longer than you'll stay, what is it? Liquid? It will stay longer, will stay irrational longer than your liquidity. I don't know. I don't know. Solvent. Thank you. Yeah. So QuantBox will tell you what's right, but our job is watch market. That's why we have so many different sentiment indicators, which are just amazing. Not just QuantBox gives you quantitative analysis of macroeconomic data, but we have all these different layers now, like with the risk gauges and with the scatter plot. They're different, completely different methodologies that do the same thing, show you the market sentiment now. It's incredible when you look at it. It's like you can look at your scatter plot and say, hey, expert, tell me about the markets. What's going on in the markets? Is it an up day or is it a down day? The scatter plot will show you. It's like literally calling a professional consultant. And then you look at the risk gauges and using a completely different methodology. You can ask, what's going on? Is it bullish today or bearish today? Okay. Tells you. Pretty amazing. And we have that layered on top of what should be. But we also know what is, which is really important. So the risk here is PCE isn't perceived as good. Probably down. That sets up a top. That it sets up a monthly swing. And this is the target if that happens. Oh my gosh. And I think it'll happen fairly quickly because everybody's long. The market will drop, hitting stops, which will drop the market, which will hit more stops, which will drop the market, which will hit more stops. Okay. And probably something like that will happen on the yens. You know what'll happen? The ballerina drops. Huh? Yeah. 87 pounds. Boom! To the stage. Yeah. Which is amazing for a 6'1" person. Anyways, so we gotta be vulnerable, or we gotta recognize we're vulnerable. That probably won't happen, and we'll probably get to here by the end of the year, and then it'll happen. Right? Okay. Yeah. And I don't know if you noticed, but today I already suggested that that would happen using QuantBox, and I suggested when I buy it back using QuantBox. This is why I can do the razzle dazzle stuff of like, let me tell you in January what I'm going to do in October. But I didn't have quantitative data to back it up. I just know what I normally do. And now we have it. Okay. You're like, oh, week 13, I think I'm going to get ready to buy back in. Nice to know. Okay. So, anyways, sideways until PCE, I guess. Today, the market is neutral, but leaning down. Okay. It's not risk on, it's not risk off, but there is some profit taking going on. So maybe it's a short-term opportunity. Maybe it's a short-term threat. Maybe, but it looks like we're all standing on our tippy toes until we get to Thursday's PCE, and that is the Fed's preferred measure of inflation. Okay. I think the other thing that is on the Fed's mind besides PCE is we have interest rates at 5.25 to 5.5. And right, so we'll call that interest rates. And the Fed's measure of inflation is PCE, and it's going to come out what? 3.2? So just for fun, let's call it 3.5. Just right, 3.5. Right? Better than 9, as they like to say. Check that out. The Fed funds rate is 2%, right? 2% higher than inflation. Is that normal? Okay. 2% above inflation. Is that normal? No, that's high. So if the Fed stays paused, and this is what the market's trying to figure out here, and now we're not doing quantitative analysis of macroeconomic data. Okay, this is again thinking forward. This is where the human steps in. Okay, interest rates stay at 5.5. But what if PCE continues to fall for the next 6 months? And it falls all the way down to, let's say, 3.0 by June or May. A 2.5 spread. What would it be normally? 1.5? So if this diverges, the more it diverges, the more the Fed will want to cut. And that's this is the real debate that institutional investors are going for. They're not thinking about today or tomorrow. They're thinking June. And you see that priced in when you look at the Fed Watch tool. They're trying to get that together. And that doesn't even account for things like, is there going to be a recession? Now, a recession will take PCE down fast. Okay. Now, my thought is, well, if oil prices go back up, this might sit around 3.5 to 3.8 for a very long time. The Fed doesn't look at headline PCE; it looks at core PCE, PCE sub C, and we'll see. But even oil prices, I think, like if you take out the price of crude oil, but I don't know, Amazon charges 12 cents more for a delivery. Somehow they shove it into the price you pay. Right? You think you get free delivery? Uh-huh. But anyways, they shove it into the price somewhere and prices go up 12 cents, or even we wouldn't even notice it, but 3 cents on the dollar, prices go up. Okay. Then even core can stay elevated. So I think next year is really going to be interesting because we'll have to look at this spread and we'll have to pay attention to things like PCE and core PCE and compare that to the Fed's fund rate, and in particular, the spread in the, I don't know what you want to call it, the shape of the Fed funds rate PCE curve. But I think that's what matters now. So I think everyone's going to be looking at like headline numbers, like NFP and CPI and PCE and whatever, all these different numbers. And I think it's boiled down to this now. I think the Fed realizes inflation's coming down, and at some point their interest rate is too high. And they're going to move slow because they also realized back in the 1970s, we didn't have a very good Fed. And the Fed would raise and then cut and raise and cut and raise and cut. Can you imagine that? Like literally in 1 year, they would raise and then cut, and then the next year, raise and cut again. All of a sudden, you're like, dude, you can't plan at all. So they don't want that. By the way, there's only been 2 periods in the Fed's history, going all the way back to JP Morgan on Jekyll Island. 2 times that the Fed has had a leader that was not an economist. the dude in the 70s that was ineffective, and Jay Powell. Jay Powell's not an economist. Yeah. He's got an amazing story. He was a private equity guy in Washington, D.C., ran a fund. I presume he made a lot of money. Retired early, which means 70, right? Yeah. And then what did he do? He worked at a think tank for free. He showed up. He's like, hey, I'm a millionaire, right? I got gray hair. I'm going to work for you for free. But they had the data. They had direct access to the data. Yeah. And he did research on debt. Then he went to all the key power players in Congress and the Senate, developed relationships with them, showing them the data. Very cool, which helped Obama in his situation. And then Obama appointed him to the Fed. You're like, boom, and now he's in the Fed. You're like, well played, sir. Well played. So here's a guy who's like, okay, I made my millions. I always see him smoking a cigar by a fire, and he's got a cognac, and he's like, I made my millions. Now what do I want to do? I think I want to run the Fed. All right, I better come up with a plan, right? Because this is how I do everything, right? And so I grab a pen and a paper. Okay, number 1, get the research. Number 2, develop all the relationships in government. Number 3, make the president look good. Number 4, get appointed to the Fed. Number 5, right? Play my cards right and become, right, the chair of the board of governors. And for someone to actually pull all that off in the spare time, I think that's pretty cool. That sounds like, and don't forget, I think you get lifetime health insurance. It's probably why he did it, in fact, because even if you're a millionaire in America, you can't afford your health insurance. So I'll see you later in the day. Should just realize you might be the ballerina on your tippy toes. Today might be a hard hat day. Be careful. Peace on earth. May the pips be with you. May your profits be above average.